Let's bring in Kevin Green, who is going to help set up the action for today. So as we mentioned yesterday, we had new records across the board there. What do you make of the positioning of the back of that and ahead of what is going to be a massive couple of days there, Kev?
Well, good morning, Sam. Well, obviously, the market is really positioning for the S&P 500 as well as the NASDAQ 100 to move higher here. We obviously have earnings this week from some of the major tech names that could actually move markets. And then we also have the Fed meeting, which is going to start today. We will get the announcement on rate cuts tomorrow and potentially the stopping of QT, which could also be a tailwind for the financial sector just as a whole. And then we have this meeting with President Xi and President Trump on Thursday. So the backdrop right now is still fairly bullish. You are also seeing that within the volatility complex. Volatility has actually crushed if you're looking at the VIX, which is now below the 16 level. So we're implying less than a 1% move in the S&P 500, which is obviously bullish for the markets, but also could lead to a little bit of compression. And I think that you're seeing that this morning where we're kind of had just some range bound action taking place here. But yesterday you saw communication services, information technology, as well as consumer discretionary kind of leading the way. And those are the three sectors that you really want to see continue to move higher because of their weighting in the S&P 500. But volatility, once again, is fairly cheap. Hedging is very cheap right now. And if we do have some type of surprise or some type of an announcement that's bearish on the market, we could actually see a pretty aggressive re-rating to the downside. But right now, we are still making higher highs, making higher lows. And it seems like the trajectory is still to the upside. A 7,000 test this week would not be too surprising. We're kind of fairly close to that level right now. And we just need those earnings from a Google or a Microsoft to really kind of push us over the edge here to the upside here for the market. I think that's what we're pricing in right now.
Okay, and it looks like as far as the futures are indicating that stocks are looking for a little bit of a direction this morning, even though we've got some pretty interesting earnings reports that have hit the tape this morning. Let's talk about UPS first and foremost. It is up in the pre-market right now, rallying in double digits at 12% higher. It does look like what they've been saying has managed to ease some of those investor concerns. Talk us through what you're seeing from that report.
Well, definitely a low bar coming into this report. We have obviously seen the stock kind of get hit over the last couple of quarters here, but they were able to exceed the street's expectations, both on the top and bottom line. Revenue came in at $21.4 billion. Street was looking for around $20.8 billion. And the adjusted earnings per share came in at $1.74. Street was looking for $1.30. Now, there is a sale leaseback transaction within that EPS that actually added around 30 cents. So if you actually back that out, it looks like the normalized adjusted earnings per share was sitting at around $1.44, still beating the street's expectations here. They did raise their guidance to the upside. They are actually expecting volumes in the holiday season, basically between November and January, to pretty much double when you're looking at the daily average volume. And that's actually going to be a tailwind for them, especially to drive top line growth. But they are also seeing the benefits of their cost cutting measures that they've been putting in place for the last year or so. And margins are starting to stabilize or even expand in some respects. Now, when you're looking at the U.S. domestic revenue, that actually did decline by 2.6% on a year-over-year basis. Now, they are leveraging prices and increasing prices to really try to offset some of that volume decline, but that has been a little bit of a concern for this company, which is why we have seen this downward trajectory. But the international front, revenue actually did increase by 5.9% on a year-over-year basis, and average daily volume on the international front also increased by 4.8%. So a pretty decent report, pretty decent guidance moving forward. Once again, very low bar. So you are seeing this nice movement to the upside in pre-market trading. Let's see how this is going to react as the equity market fully opens here. And if buyers really still want to step into this name, because it is actually trading at a discount compared to its peers within the space, as well as the broader S&P 500.
Yeah, it looks like some of those cost-cutting measures, as we've seen, unfortunately, having to slash jobs is sort of helping things out there, at least trying to mitigate some of the other concerns around the macroeconomic uncertainties and the tariffs as well. Let's just stick with the earnings theme, because we've heard from another company this morning, obviously, UnitedHealthcare, a big Dow component there, better than expected as well. And we are seeing shares up in the pre-market too, no doubt helping the Dow this morning too. What did you make of those numbers that we got from UNH?
Yeah, you're seeing the shares up over around 3% right now. They did beat both on the top and bottom line. Adjusted earnings per share came in at $2.92. She was looking for $2.79. And when you're looking at the medical loss ratio, that came in at 89.9%. pretty much in line with the street's expectations, so they were able to kind of minimize some of that risk that has been an issue for them in the past. And when you're looking at the Optum revenue, that was actually flat on a year-over-year basis. That's going to be the big sticking point over the next 6 to 12 months. There is some issues when it comes to the federal government and their probe into Medicare, Medicaid payments by UNH, as well as some other insurers, and that's really the Optum business is really the exposure there. So we'll see how they kind of talk about that exposure on the conference call. But they did adjust their 2025 adjusted earnings per share estimate to the upside. Now they're looking at exceeding $16.25. Previously it was at $16 even, and that's above the street's expectations of $16.20 here. So overall, once again, a pretty decent quarter, very low bar for now. Let's see how the market actually reacts in the open because this is actually a very big options type of stock. We've seen a lot of attempted short squeezes in this name over the last month and a half or so. We know that Warren Buffett and Berkshire Hathaway have taken stakes, as well as some others have taken stakes into this company here. So a lot of volatility to start off the morning, but a pretty decent report. I think the big issue that you have that's kind of a dark cloud over this company here is going to be trying to settle this matter between the DOJ and UNH, or if there's going to be even more of an escalatory tone from the government around these Medicare and Medicaid payments.
Yeah, I believe this is the first earnings report that we're getting, actually, since the Berkshire boost or the Buffett bump or whatever you want to call it right now. But as you mentioned, that MLR being a very key metric there, I know that some of the costs involved here have certainly been weighing on the minds of investors. But a lot of people do see this as systemically important. So perhaps that's what we're seeing here in the stock performance this morning. Let's switch gears to another story. We're tracking a merger that's being reported now between Skyworks Solutions and Qorvo. I guess I'm saying that right. Talk us through that one.
Yeah, we are seeing a deal, a merger between the two companies here, valued at around $22 billion. Now, this is going to be a cash and stock merger for both of these U.S. radio frequency chip giants here. And this is actually going to maybe cause a little bit of concern when it comes to the acquisition or this merger just in itself, because you could look at it and say it might be a monopoly that's being developed here in the United States. But the structure is basically Qorvo shareholders are going to receive $32.50 in cash for every share that they own, as well as 0.96 shares of Skyworks. And this is also going to provide an ownership split where Skyworks is going to hold around 63% of the total company. Qorvo shareholders are going to own around 37% here. Once again, the valuation sitting at around $22 billion. This is for them to be able to improve their competitiveness within this space here. They are a major Apple supplier, both of these companies. Now, Apple is making some RF chips in-house. They utilize them within the 16E product offering here, but it is still going to take some time for them to really try to get themselves away from both of these companies. So in the short term, it seems like the market's really optimistic with this refresh cycle taking place in the consumer device segments of the economy. But over the long term, they might face some risk if Apple is trying to obviously make all of their RF chips in-house. It's just going to take a little bit of a long time for that to actually take place here. So we are seeing a nice little pop to the upside here, and we'll see if this deal actually goes through. Once again, this is going to be a little bit of a regulatory hurdle, but we have seen some pretty decent sized mergers taking place here that have been approved over the last couple of months. Let's see if this deal is going to be approved as well.
Okay, and what sort of levels are you looking at on the SPX today? Obviously, we cleared that 6,800 bar yesterday, and we are looking at fairly directionless sort of futures right now, looking pretty range bound at the minute. But what on the technicals and the charts are you looking at right now?
Yeah, to the upside, 69.10. To the downside, 68.30. Once again, volatility is kind of compressed here, so let's see if we have a range-bound day, but the market's still skewing to the upside when you're looking at the options positioning.
Okay, great stuff. KG, thank you so much, as always, getting us across those key stories. I'll talk to you a little bit later on.